What's up everybody, welcome back to my channel, Earn It, Save It, Invest It. In this video I'm going to break down my week 15 of my 100K challenge or my road to $100,000. Now I am taking this portfolio balance of $7,354 and I'm trying to make $100,000. I'm trying to do it in a long span of time, 520 weeks. I'm only at week 15. I know that's a lot, that's 10 years. I plan to do it before, my hope is to do it before, but this is my challenge right now. Anyone can join. You can do it with any amount. You can start with 1,000. You can start with 10,000. You can start with whatever thousand or hundreds of dollars. But the point of this challenge really is to continue to invest every week, every month, and to just be making smart decisions with the portfolio. So I'm going to break down exactly what happens. What did I do? Did I make any buys? Did I sell anything? And what do I think is going to happen in the market? Again, every week I go over my portfolio and I go over kind of what I think is going to happen in the stock market. So I'm here to break it down really quick. It's week 15. If you like this stuff, please give a like and subscribe. I really appreciate it. Let's break it down. I am going to ask one simple quiz, kind of a question is, when you get one 36-year-old to play a 4-on-4 basketball game, what do you get? You get a broken rib. So I have a broken rib. I'm 36 years old. I played some basketball today and I ran into a wall trying to save a ball. So if I start breathing kind of heavy, yeah, that's it. But anyway, my road to 100,000, I'm currently at $9,428.94. Again, HIMS, when you look at the 1 week performance, it's at 15%. And HIMS, I have always said, it is a big piece of my portfolio. It's a heavy weighted. Now it's at almost 30%. I was already talking about selling some of it, but I knew it was going to have some little of a comeback right here. Now that it did this much of a comeback, it's already at 55. I do believe it can go into the 60s. But like I said, I do want to start putting a little bit more equal weighted for my portfolio. Having 30% into HIMS, it just swings my portfolio a little too much. Even though I still believe in the company. I do believe in the company. I believe in the future of it. I just don't know if I want to have that much weight in it. I've invested, I think it was a little bit over $1,000 into it, basically $1,000. So if I take out $500, I'm still holding on to $2,200 worth, and I only have to sell less than 10 shares, right under 10. Let's say I'll sell exactly 10 shares. I get $550, so I'd be at 40 shares. I'm only in $500 now for my investment, right? I'd trim half of my initial investment and I'm only taking away under 20% of the actual value of that holding, right? So I'm able to take away 50% of my initial investment, but only taking away 20% of the actual holdings of it, which kind of leaves me with that, like, it's in a way of like a 30% spread of that 500, right? It's a weird way of seeing it, but like, I've already made money on it now. Now that it's just such a heavy weighted, I kind of want to push, kind of move on from that. But anyway, HIMS did perform really well for me in the last week, so that has helped. Obviously, you see 7.23%. That was just on Friday, so that helped a lot. TQQQ is obviously, it's been booming lately as well. Celsius, it had a big boom last week. This week it kind of recovered a little bit. As you can see, it's down about 1%. But nonetheless, I think Celsius is just going to be an amazing holdings for me. I have Nike, which went down a little bit, Fubo, Meta, Amazon. It all kind of evens out. Fubo is one that I'm a little sad. Like, I've been talking about, loading up on more cash, and I still am not exactly regretful, because every week I deposit $50 into the account, and I'm currently at $400, and I wish I had maybe bought a little bit of Fubo last week, and I didn't. So, I've been talking about, I just want to have a little bit more cash. I feel like something might happen to the market. So I didn't really buy into Fubo. And I was saying I still think it's going to go into the threes, and I still believe it will. I believe with all of this turmoil that's going to happen, I think Fubo could fall victim to it. The problem with it is that Fubo is basically pending a deal, a huge deal. And when that goes through, I think it almost doesn't matter what happens. It's going to go up. But when are they announcing that deal? If they announce it in like December, then Fubo will feel all the pain with the market. So I still think I'll have a chance to get it at the 350 mark at some point. Don't play that game though, really. I shouldn't be playing that game. But I did also want to get my cash balance up a little bit. I just wanted to get the cash up a little bit. And so that's what I did. I'm not trying to exactly time the market out too much. I just wanted to have enough cash. So now when I'm depositing $50 every week, I can spend that $50 every week and still have a little cash ready for, a downturn, or a correction, or even a crash, right? I have some cash in there that I can, put to work. So, yeah, that's kind of what happened in this last week. That's where I stand right now. In the last week, I've gained $454 from September 8th to September 12th. I started at $8,900 just about, plus the $50 deposit and the $450 I made. So now I'm at $9,435. As you can see, my portfolio, the performance beat all the indexes. Again, HIMSS did that for me. So I was at 5%. I over doubled everybody else, NASDAQ, which was at 2%. So that was pretty good. Since I started this challenge, right, the $100,000 challenge, it was June 2nd of 2025, and I started with $7,354. I have deposited over the 15 weeks $750, and my investments have gone up. I've gained $1,331, so that puts me again at $9,435. Since I started this challenge, I'm up 17%. Now I'm officially above all the indexes, which is, it feels really good. It's a little crazy to see that the Russell 2000 is still in first place out of all the indexes. But nonetheless, I have made a major comeback, HIMSS, and I am now above all the indexes. If you see just last week, a week or two ago, I was below all the indexes, right? Last month, I was well above the indexes. A month before that, I was well lower, right? It's an up and down game. You just have to make sure that the stocks that you buy continue to go up over time, and that's the point of it. So far I'm doing okay. Week 15, according to, if I were to try to, span this out, the $100,000 over the 520 weeks with the compounding annual growth rate of 20% a year, right? I have it marked down of each week. This is how much I should have. So week 15, I should be at 8,519, and clearly I'm almost $1,000 over that. Next week I could be near the goal, right? I could be under the goal, or I could be $500 over the goal, right? There's no telling exactly where the market's going to take you every single week. Again, it's just about making good decisions every week and overall having a good portfolio. So I think my portfolio is pretty balanced. Again, I do want to start investing a little bit more into the Amazon and into Fubo right now. And I do want to add a position into a new company. I just don't know what it is. So I'm taking my looks out there, and I'm going to actually go over, I did have a video that I went, I said these are the 4 stocks to buy or to watch in September, and I'm going to kind of go over their performances and what I said, what to watch for, and then what they have done. As you can see, I have not made any purchases this week. As I said, I'm just kind of building my cash balance right now, so that is what it is, but whatever. I'm going to start buying now, though. This is the Fear and Greed Index. Now, this is what I've been also saying, is that we're going to kind of bounce around neutral a little bit, possibly go into fear eventually, but we're going to be bouncing around the bottom of greed into neutral for right now. I don't know how far into greed we'll get, but then we are going to bounce into the fear in a little while. Now, this is what's kind of interesting, right? We have a neutral overall, right? When you see this is the market momentum, right? And the market momentum is at greed, right? And then we also have the stock price strength, which is at extreme greed. Then we have the stock price breadth, which is at a greed. Then we have the put and call options at extreme greed. We have these big factors, or these are factors that they put into creating that that grade, that range, right, of where we are at. And it seems like we're still pretty greedy in a lot of these departments, right? So that's a little interesting. The AAII sentiment, again, since last week, we've now gained more bulls, we've gained more bears and lost some bulls. And we actually lost some neutral as well. So now everyone has moved over to the bearish side. Very weird, right? It's just weird that everyone is getting bearish when the market is going up. It just seems a little weird. The Qs, this is what I want to go over. And this is, when it comes to the stock market, what I think is going to happen, I think we're going to have a fairly decent correction. I don't think it's going to go past 20%. I don't even know if it will go past 10 to 12%. But I do think a 10 to 12, maybe a 15% correction is in store for us. And I'm going to go over exactly why I think that's going to happen, or why I think it's a high possibility. First of all, let's just look at the seasonality. The Qs, the NASDAQ, the S&P 500, all of them are fairly rough the same. September, bad. 30% over the last, 10 years? Only 3 out of the last 10 years have been positive. October, only the last 5 out of the last 10 have been positive. Of course, November and December a little bit better because you're starting to, recover from those. But August, September, and October are fairly bad months. August, we had a positive month. We were up 1%, right? That brings me a little bit of wariness because I think that could really push September and October into more of a negative range. We also have the Fed funds decision happening in the middle of September. So I think that's going to also play a part in where the market moves, where the market momentum, what people are feeling about the market. You have to understand the stock market does go on a few things. It goes based on actual numbers and fundamentals, right? If fundamentals are just completely off, then things might start breaking. The stock market's also based on emotion. Sometimes it doesn't matter about fundamentals. If everyone's excited, the market could be going up, or the fundamentals could be in place and everyone just feels bad and the stock market goes down. So having a big decision like this, right? The Fed, it very seemingly like they are going to lower the rate by 25 basis points, maybe even 50. The thing is though, why are they doing it? Are they going to be signaling harder times ahead, more tariff impact than we expected? What are they going to say? And again, they only have to say something to freak out the market and freak out people. It doesn't necessarily have to be something really that's going to hurt, but it could just get people emotional. Now I have this chart, and this is going to be one of the biggest reasons why I think we're going to have a correction. 2025 feels just like 2018. 2018 was Trump's second year in his first term, right? His first term, second year. 2025 is his second term, first year. The reason why I feel like they're very similar is that Trump in the second year, by the time it was the second year, he actually had a hold of some things, right? His first term, for any president, their first term is always going to be a transition period. You got to get got to get things moving. Well, the second year, he had 4 years of planning while Biden was in office, and they already had everything basically in place. So once he got in, they were ready to move. So I feel like 2025 is very similar to 2018. And when we look at the numbers, they are so similar. You can see where we started off at, right? This is now the chart. The green is 2025 and the blue is 2018. We obviously are a little bit up more right now. And actually, we're up more in 2018. It's 15%. And in 2025, we're up. Okay, let's just say they're both up 15%, right? In 2018, it was 15.2%. In 2025, it's 14.98%. I mean, they're almost exactly at 15% starting from January 1st to September 12th. Almost identical, even with that big drop we had in April, right? We had an enormous crash. I mean, it crashed 20, 30%. It's crashed, I think, 23, 25%. So we had a major crash, we had a major correction, and we recovered fairly fast. You know, obviously we kind of had almost like a double dip correction in 2018, as you can see, but at the end of it, it is so similar. I mean, even when you look at the time that we dropped the most, even like you look at our early peak was almost the exact same moment of the 2018 early trot, right? Like the trough, right? Because like we peaked really high and then we fell hard. And in 2018, we peaked really high and then we fell really hard really quick, and then we came back up and then we fell hard again. But the point is, we fell all the way down to the bottom. The bottom was about April. That was our last bottom. Both of them were in April. And now we're up 15% year to date on both 2025 and 2018. Now, what happened after September 12th, right? Let's go September 12th, 2018 to December 31st, 2018, because we obviously can't do that for 2025. So let's take a look at what 2018 looked like. That's what it looked like, negative 15%. Negative 15%, starting from the 12th of September down to December 31st. Now, as you can see, we started making a comeback at the very end, right before Christmas, and after that, we didn't look back and we continued to rally. So 2019 was great. But the end of the year was so rough. And as you look in the very beginning, even into all of September was actually okay. September was okay, a little bit of a dip, and then we kind of went up, and then, but October is where it hit, and it hit hard, and it continued to go into November, and it continued to go into December. Now again, we do seasonality, right? Seasonally, historically, we have good months, November and December. That does not guarantee anything. Historically, we have bad months in August, and we were up 1%. So historically, we have bad months in September. Well, so far, we are up. So it's just about keeping an eye on these things and what could happen. Because again, we have these big things happening. And even though the fundamentals earnings are going to be coming out in a month or so, it's like, will that matter when the Fed is putting out their numbers and they're saying whatever they're saying, their reasoning behind the rate cuts and stuff, right? It doesn't matter if the fundamentals are okay. If the market is fearful, things are going to crash. And this is the cues all of 2018. As you can see, you know, it kind of broke even basically, right? It was like, yeah, I have it, I didn't actually put the percentage, I just have the stock price of the cues. But as you can see, it was almost flat, right? We started at about 150, ended around 150. And we had a great beginning most of the year, right? 80% of the year, we were up good. In October, just, right? So I just feel like it has a very similar feeling. Like I showed you those charts, they are so similar. So I don't know. That's my feeling. That's my gut. That's just my gut feeling. As you can see here, I actually put it on, right? We had in the beginning of the year, we had a 10% correction, an 11% correction, right? And how I said we kind of had like a double dip correction. And then we just boomed from there, right? We just continued to go up, and then we had a full 23% correction at the end of the year. Now, could we end up flip-flopping? Because we already had a 23% correction this year. So do we have a double dip 10, you know, like I said, we could go 10, 12%. So maybe we don't have this bad of a end of the year. Maybe we already had that. And then we just have a double dip at some point in September and October, and then November, December run. That's a possibility to me. It's just, again, a gut feeling, my opinion. Now, there were some stocks I said to watch. It was Fubo, Palantir, Molina, and Hesai. And I don't know if that's definitely not the order it went in. But just to kind of go over what they've done this month, I just wanted to show you Fubo in September has been up almost 14%. So that was a pretty good call. Hesai is up almost 13%. Pretty good call. Now, Palantir, I said, look for it to drop eventually because I just think it's overvalued. And, you know, every month that it goes up just means it just inches more closer to just having that bigger correction, in my opinion. And so I said, just watch it. Just watch Palantir, watch what it does, because again, it kind of goes with the market. And if the market moves up, so will Palantir. But if the market moves down, Palantir, I think, is going to move heavy down. So just watch it. And then I actually had Molina because they had such a big drop, about a 50% drop recently, about a month and a half ago, 2 months ago. So I said, watch out for them. It's not like a stock that usually goes up 10, 20, 30% in a month or anything. It's a healthcare company. But I still said, hey, watch them. They just went down pretty big, and they could end up making a little bit of a comeback here over the next few months. Now, again, it does depend on what the market does. If the market starts to shake out and doesn't do well, then Molina will also get hit just as well as anybody else, I think. But I don't think it'll be hit as hard. It's not a growth company. It's not a high PE company, right? So I would just say watch it starting now and over the next few months to see how that performs. But as of now, it's been down 1.3%. So that's not a great call on my end. But that's about it. If you do like these videos, I hope you enjoyed all I had to say. I'm doing my $100,000 challenge, just trying to do what I can to make more money and to build my portfolio. It's not even about making more money. It's about just building a good portfolio, obviously, and just having that just build and build and build and do it right. People like to take high risks. People like to play with options. People like to do all kinds of things. And don't get me wrong, people are successful at it. But the rate of success is a lot lower and the rate of failure is a lot higher. And so I would prefer to choose a little bit of a higher successful rate, even if it's a little bit slower. So if it takes me 520 weeks to get to 100K, I'd rather do that, because over the last 10 or so years, I could have done that. Right? I could have easily built a portfolio with that kind of mindset, mentality, picking individual stocks over the last 10 years and probably made a lot more than that, but I didn't do it. So now I'm going to. I did pick other stocks. I did make moves. I could have done it, but I didn't do it on such a consistent basis. I didn't do things so much in the way that I'm doing it right now. And so I am not a professional in any way. I am no guru, but I am someone who pays attention. I am someone who tries to keep my ear and my eyes on the market and just try to make the best moves that I can, and not try to be too risky. When I went risky, I lost money. And that's why I am where I am. I know I could have made a lot more money if I had just stuck with the strategy, but I didn't. I went high risk, and I had some high rewards, and I had some high losses too. So yeah, just build a good portfolio. And if you want to follow along with this challenge, go ahead. Please comment anything, like any stocks that you might be watching yourselves, because I want to, start looking at other stocks as well. I want to add one to my portfolio. So please give a like and subscribe if you like this content. I really appreciate anybody who at all watches. If you are watching, again, at the end of this video, if you're seeing all this, thank you. Thank you. You are a loyal subscriber. There's a few of you right now, and I hope to gain more. But at the same time, this is a personal accountability little bit, But yeah, anyway, thank you for watching. And never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.